Hi, Jonathan York, Faith Financial Partners, looking at investment markets. Obviously, geopolitical issues have really taken sort of center stage here with the attack from Iran into Israel. That's obviously a retaliatory attack after Israel bombed the Iranian consulate in Syria. We're now just waiting to see what the Israeli response will be. Certainly global powers are really trying to sort of de-escalate the issues, but it's just going to be very, very tough over the next sort of few days. Now, on the back of those geopolitical issues, interest rates in the US has risen. 10 years up to 4.66, and that 2 year is now nudging 5% at 4.98. So that's seen a bit of a sell-off in global equities, and really comes on the back of some interesting earnings coming out of the US. JP Morgan sort of beat on the top and bottom line, but gave some sort of slightly weaker guidance, I suppose, on sort of net interest income, and that saw their sort of shares fall quite dramatically on Friday. But then Goldman's came out with their earnings; they were much better than anticipated, and saw their shares sort of rising. So certainly a mixed bag on earnings at present. That comes on the back of some pretty strong data. The New York Fed Empire State survey, retail sales were up 0.7, and that's versus expected 0.3. Also as well, much better news coming out of China. Their GDP for March quarter was 5.3 versus anticipated 4.6. So certainly much stronger from China, and really, potentially those sort of measures put in place at the end of last year are starting to sort of impact on the economy. Now it's just a question of whether they can be maintained over the next sort of 2 to 3 quarters. Fed Jay Powell's on the tape here, and coming out with the same sort of rhetoric, really. But interestingly, he did come out and say, there has been much less sort of fall in inflation over the last sort of 2 to 3 months. They would have looked for a little bit more. So potentially that just pushes back any sort of rate cuts. But the Fed is still talking about rate cuts this year, potentially now only 2 cuts rather than sort of 4 or 5 that were priced in at the beginning of the year. Interesting as well, ex-President Trump's criminal trial has started. It's really going to be quite interesting though, because out of a jury pool of around sort of 60 to 70 odd people, a half had to be dismissed because they sort of acknowledged that they couldn't be impartial during the trial. Now, we don't know whether that was because they were Trump supporters or whether because they were anti-Trump. But certainly the case would be pretty interesting. Now, what is quite interesting is that oil hasn't really spiked. It's still around sort of 86 bucks a barrel. A lot of people after the Iranian attack on Israel was anticipating that oil would spike above 90 bucks, but that hasn't happened yet. Now in the UK, it's still a pretty tough struggle out there for the government, and really looking increasingly likely that once the election comes towards the end of the year, it will be a whitewash for Labour. and really could result in the Conservatives having the smallest number of seats in Parliament for a long time. Potentially only the sort of hope they have is that the Bank of England does start to cut interest rates because the UK economy certainly needs it. And if that does happen, then potentially the economy starts to recover, and then potentially they might just get a little bit more favourable in the polls. But that's really a long shot at present. Now, interestingly, the ECB is talking about cutting rates. And that's really quite interesting because as stated here before, there really have been laggards before in sort of rate moves. But ECB President Christine Lagarde has sort of made it pretty clear that they are looking to cut interest rates when it's appropriate, and that time is coming soon. Now, in Australia, obviously the country is really reeling from the two recent attacks. One, the stabbing in the mall, and then the other attack on the priest in the church. So really sort of economics has really taken a bit of a sort of back seat as the country sort of grapples and comes to term with these sort of events. But if you do look at it, the RBA does need to look to cut interest rates, and that's probably going to happen in the second half of this year. Now, here in New Zealand, expected to get the latest CPI data. That's expected to show a bit of a fall to around sort of 4 to 4.2% from 4.7. And interestingly, if it does come in around 4 to 4.2, that'll be higher than the Reserve Bank sort of had in their forecast at their last meeting. But what is interesting is that the Reserve Bank has come out and said, potentially at these sort of levels of inflation, looking for it to sort of try and sort of fall below that sort of 4%. An OCR neutral level would be around 3.9% on the interest rate. Now, bearing in mind we're 5.5 at the moment, that maybe gives a clearer indication where they think rates will be towards sort of year end, early part of 2025. Now, obviously, after a pretty decent sort of summer period, it's just going to be interesting to see how sort of tourism numbers hold up over the sort of winter months. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.